Hey, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is November 2nd, and let's get started with the charts. We're currently trading at 102.86 this morning. Um, as you can see, bonds opened a little bit better than our close yesterday. We're right up here. I think it was a big deal that we actually broke 102.80. That was a pretty tough resistance level, to be honest with you. So our next resistance level is just right above us. So you can see we just nudged up and kissed it this morning at 102.86. So our support's coming in below us at about 102.73 and about 102.50 now. So if you look at my mouse, boom, boom. So you can see we have quite a bit farther to fall than we do what we have to gain. As far as reports go, unemployment came out today better than expected by a few thousand. That was not bond friendly, but productivity, overall economic efficiency came out. That was definitely helpful for bonds because it has an impact on efficiency has an impact on inflation. So the more efficient we're running, the less inflation that may occur. So as far as news goes, the Fed says inflation is soft. That was definitely bond-friendly news. And of course, the tax reform is really what's been kind of helping bonds as of recent. So big news is going to really be tomorrow on the jobs report. So if you are floating, I would say just be careful. I think it's okay to float, but just be careful of the jobs report tomorrow. That could have a pretty major swing on bonds because for so long, the jobs report has really just been estimated because of the hurricanes and everything else. So tomorrow is going to be a pretty real number. So we could see some market fluctuation, not just on the bond market here, but even in stocks. So anyway, let's quantify where we're at. Freddie has not released the averages for October yet. It's still a little fresh for that. But Freddie does still have the release for September. They said the average consumer came in at about a 3.81 interest rate, paid half a point to get there. As you can see, though, bonds are trading much worse than that. So if the average was about 103.40 for September, and bonds are currently trading at about 102.86, that's about 54 cents difference. So if the average consumer was paying about half a point, now the average consumer might be paying closer to a little over a full point for that same rate. So, guys, we have seen the market just continue to erode as far as interest rates go. So that's where we're at. Let's get into the projections. Last projection was a hit, and you know what? I had this really narrow range. So, but we stayed right within that range. Here's my next projection, and this is going to be a tough one because the analysts are all over the board right now. I'm going to say that the bond range forecast is going to be between 102.30 and 102.90, and I know you're thinking, Scott, that's really pessimistic of you, but I could be wrong. I often am, but I really think this upward trend is going to be short-lived. I think we're gonna touch up and kiss 102.90, maybe 103 for a short time, but I think then we're going to be dropping back down. So so compared to where we're at, that's about 4 cents up or 56 cents worse. So I think if you are floating right now, you actually have way more room to fall or get worse than you have room to actually get better. So anyway, if it was me, you know me, I'd like to play it safe. I might actually lock in while we're at the top end of this projected trading range. So anyway, that's it for now, but we'd love to hear from you. You can leave those comments down below. Let us know what you think. And don't forget to hit that like button. Everything likes to be liked, so does this video. And if it's your first time on the channel, you can click the link at the top left. That will take you to our subscribe page. And so you'll just get a little notification every time we release a new projection. And over at the top right is Mortgage Bonds 101. So if none of this made sense to you, don't stress, click that, and that'll give you all the basics that you need to know as a consumer when you're trying to pick the best time to lock in your interest rate. Okay, that's it for this week. Have a great weekend, and we'll see you next week. Bye-bye.